Jake, really appreciate you being here today, man.
Yeah, absolutely. Thanks for having me. Look forward to diving into some different things here, but excited for this new venture you're on, and um, yeah, excited for the conversation. So,
Um, well, for those of you guys that have been kind of following along, the trailer video talked about having different investment perspectives, but we've kind of kept it very business related so far. So Jacob's the first one that we've kind of ventured into from an investment perspective, and I'm excited for it. So let's maybe just kind of dive right in, right to the hard stuff early on. And I thought maybe it'd be helpful to provide, kind of an example scenario. So you have 10 people walk in over the next week and they want to work with you from the financial planning side, got different backgrounds, ages, income levels. What are like the top 3 to 5 things that you guys do from a financial planning perspective, irregardless of circumstances, to that, just never change?
yeah, that's a good question. So, I think that what I've learned over doing this now for 10 plus years is personal finance is exactly that. It's very personal, and every person that comes through, if you have 10 different people, you've got 10 different people who all view money a very different way. And they all come from various backgrounds. They all come from various family experiences, whatever it may be. And so, what I've learned, some people, if they've grew up in poverty and they're coming out of poverty and they're first generational wealth, a lot of times you see them maybe having flashier items because that's just kind of what symbolizes like, hey, I've made it in that regard. Some people who have grown up with generational wealth, it may look and feel a lot different for what money means to them. And so, before we dive into really any investment recommendations or anything like that, a lot of being invested is the time in the market, not the timing of the market. And so, whether you're a very conservative investor or very aggressive investor, generally speaking, we want to focus on the goals that you have and kind of back into what kind of savings or what kind of investing you need to do based on that. And those family dynamics really play a role into what we would recommend in those situations. So, I think it's easy to say like, hey, you need a Roth IRA or you need a 401k or any investment savings vehicle. But for some people, and I think I'm seeing it now more and more, and it's kind of, I think, how the financial industry is changing a little bit is I don't know that our generation is going to be as much of, hey, you work till 60 and 65 and then you just stop and don't work another day in your life. I think with kind of the gig economy and just the flexibility of, being able to do stuff like this where we're talking virtually, the job opportunities that are out there are endless. And so I think you're seeing a lot more of like, hey, we want to make sure our end goal is good, or our financial future is secure, but then we also want to have fun in the meantime and have our assets work for us, and be able to generate income or do things now with it potentially, which I know you're kind of in a much more income generation field with the commercial real estate world. And I think it's kind of that balance of both market like investments, planning for the long term, but then also saying, hey, what do you want to accomplish in a year, 3 years, 5 years, some shorter period. So all let's say, like, I view our role as kind of, I listened to your podcast a couple weeks ago with Brian Adams on, who I know you work with, and listening to his view on just, I think there's a lot of wisdom in that whole podcast, but listening to like his view on like the investment world and this family office concept, that family office concept is really fascinating, really interesting, but it's a very small segment of people that have the access to that. And so our role, or kind of the way that I view the future of financial planning or financial services, is trying to be a personal family CFO to various net worths across the border, trying to create almost a family office light, if you will, for clients that maybe don't have the resources to work with Brian or something, but they still want to have that trusted advisor of being able to get help with, investing, taxes, estate planning, charitable giving, anything under the financial umbrella coming to us as kind of their financial quarterback to help them with those solutions. So 3 to 5 things of just like, hey, everybody should do this. I think it's hard just based on where everybody is coming from with what they want to have accomplished, really. So
Yeah, I mean, that's probably on me for the way I worded it, because one of my pet peeves is you you look on social media, and we can get into the noise later of the financial services industry, but you look on social media and all the quote unquote gurus want to say, hey, you have to do these three things, or these five things or whatever, and you'll be financially secure. But I think you really hit at least my mindset on the nail, head on the nail, whatever the saying is, um, when you said that personal finance is personal. I love that, because I do think that you really do have to be nimble, and you have to play to the person's desires, wants, and just the way that they act and feel, right? Like you kind of hit on, based on their background, they may have certain tendencies. So maybe talk about, like, what's that conversation look like as soon as someone comes into the room, right? Irregardless of, what their age is, their circumstances. How do you kind of figure out, okay, well, this is the route that we need to go with this person versus someone that walks in 2 years or 2 hours later and has kind of a different desire set?
yeah, I think that like if somebody came in and for an introductory meeting, you know, we may spend the first meeting, and I don't form any recommendations, opinions. It's just purely listening. And I think that's a lost thing in society today is just uninterrupted listening time. People love talking about themselves if you give them the opportunity to do so. And I think just if you let them talk about themselves, and then even from that point, if you're quiet, even go through some awkward quietness to allow them to talk even further, you start to really see deep down what's driving, I think, a lot of their decisions or just a lot of how they feel or a lot of um, just where they're at and how they want to go. So I think some of the keys I try to focus on is, always asking open-ended questions of saying, how do you feel about this? Not, do you feel good about this? If you say, do you feel good about this investment? They can say yes or no. If you say, how do you feel? Then you can't say yes or no to a how question. And so then you start to dig in a lot more to saying like, oh, when I saw my statement last month in my 401k and it was down $200,000, I wanted to go jump off this building. That's a much that tells you a lot compared to if somebody's like, oh, I saw my statement, it was down 20% and I just didn't even look at it. I just kept going about my way. And so just kind of asking those open-ended questions, I think you gain a lot of insight from that. So usually we spend the first meeting just purely listening, seeing where they come from, because I can easily tell you how to get from A to Z, or you tell me how much income you want to see in retirement. I can easily, draw up that calculation. I think that in like the information world that we're in, that's all pretty easily accessible. You can go online and type in like, hey, how much money do I need to retire? And everybody's going to have some tool out there that you can click on and work the numbers and things like that. But that's not accounting for the human element that I think is so important to get from A to Z. So I think the information world that we live in, there's a lot of beauty in it, but there's also, I think, with that, in my opinion, of the future of our service and a lot of services is as AI becomes more and more, as technology becomes more and more, I think people more and more are going to want a human to help them guide them through whatever life comes at them and just having that trusted person along the way. So,
Yeah, a couple different things we can hit on within that conversation piece. And the first I want to hit on is kind of that whole idea of listening. So I love the book Psychology of Money. I don't know if you've
mm,
read that one or not, but
yeah.
love the book. I don't agree with everything he says in there, but what I do love about it is the way that he attacks the psychology behind, like, spending habits, investment habits, things of that nature. How do you kind of use? Do you ever feel like a therapist when you're sitting there listening in that first meeting of just trying to decipher, okay, hey, what motivates this person?
Yeah, no, I think the motivation is a huge thing, and I think that in my view, if I said like, hey, who are the most successful investors that we have, I would say it's the people that view savings as something they have to do, like paying your mortgage, paying your bills, et cetera. If you view savings or investing, I wouldn't even say savings, but more investing in that same realm of like, hey, I just have to save this amount, your financial success is going to be unbelievable over a long period of time. I don't care who you are, what age you are, whatever. If you view investing that way, um, it plays out. Albert Einstein has the quote, the most powerful force in the universe is compounding interest. And so the more that you just put money into these accounts, the better off they end up being for you. So the people that are the opposite end, which is, I think, a lot of younger society is, hey, I'm going to pay my mortgage and then I'm going to spend and do all my fun stuff. And then if I have money at the end, I'll put it in a brokerage account or something. And you can always find something to spend money on. And so those people usually end up um, not getting to the end there. So I think that's one side of it. The other thing that I really focus on is like, and this is kind of it's a large reason of like my current passion I would feel with just life, but also as I try to bring that to clients is like really just focusing on what you can control. And so when you really boil down financial planning or financial services, there's parameters for which you can control, which is how long you work, how much you save and spend, and then the risk that you take. So generally speaking, any question that we get is going to fall under one of those parameters. Either you're telling me you want to work less, you're not saving enough, or you're spending too much, which are kind of chicken or the egg type thing. Or lastly, the risk with your investments is off. You're scared of the markets, or you're liquidating your investments at low points because your risk tolerance isn't really where it should be. And so we always try to elevate your concerns to like, hey, is that really controllable or not? Because I would say a good portion of our day is people calling in, afraid of the current political landscape or, inflation or wars or all this stuff that's on the news. But that's just, you can't control any of that. And so even for my personal life or my practice or my health or whatever, it's like I really focus on what I can control. Anything else, I just don't even let it bother me because it's going to happen regardless. So whether that's your work life or your fitness life or your health life or whatever, I think that you gain a lot of happiness and flexibility and just joy by focusing on those controllable elements. So the one that really sticks out to me a lot is budgeting. I think budgeting, if I were to say like what's a fundamental that I think everybody should do is budgeting. And I think that's across whatever net worth. Now, not everybody does, but it's like I've got this Whoop on my wrist. I'm sure you've got some sort of tracker on yours. Like we're tracking our sleep, we're tracking our fitness, we're tracking our, you know, food that we're putting in our bodies. We're tracking every single component of our lives. But for some reason, from what I see, is when it comes to like putting a pen to paper saying like, hey, I'm making X amount of money and I'm spending X amount of money, people don't want to do it. People just are afraid of it. I don't know if it comes out of just oh, what if I get to the end of the month and it's not there, or what if I have to cut out some fun things in my life? Um, but I think that's equally as like if you're going to track everything else, why wouldn't you track your most valuable secular asset, your ability to earn an income? Like that's your most valuable asset you have over the next 30, 40, 50 years. Like tracking where those dollars go to me is very important. So
Yeah, I'm pretty passionate and maybe a little bit psycho with my budget. I look at it much more than I should, but I've also found ways to make it easier on myself. Right, like there's a bunch of different ways you could go about creating a budget and engaging with that budget on a regular basis. Um, but I think there is a lot of trial and error there in terms of what works for you. Do you guys kind of walk through that process, or is it black and white? Hey, this is kind of how we do it. This is what works. These are proven methods, and this is what you should stick to. Or is it more, hey, let's figure out what type of system works for you all?
yeah, generally the latter. I don't have a hard and fast way of what's the best budgeting tool. I don't even sit down with people a lot of times and go through all their grocery bills and Starbucks and whatever, because I don't care. I don't care how you spend. Like if Starbucks is what you're passionate about and you want to spend money on it, like more power to you. Like spend money on
Yeah.
whatever you're passionate about. So for me, like I take it more of the approach of just knowing where your dollars are going, and then if you want to make decisions, it's kind of like tracking your fitness or tracking your food. Like you can track your food, and if you can eat pizza all the time and put that in a my fitness pal or whatever, you're probably not going to get to where you want to be. But same thing with your budget. Like I think it's still worth tracking just to see where you're going to get, and then if you want to make changes, you can. And to me, I find a lot of almost like beauty and freedom in it, because if you're tracking everything, to me, and if it's like, hey, I've got three or X amount of dollars allotted to some category, let's just say clothing per month, and you get, it's like that gives you the freedom to like say like, hey, I can go buy whatever it is. I can go buy a new shirt or new shorts or shoes or whatever it may be in those constraints. So I think there's some beauty and abundance, I think, in it, whereas I think it's viewed in a very negative connotation. Like we always say, it's like, if you're overweight and you go to your doctor, like people don't want to go to their doctor because they know they're going to say, hey, you need to diet and exercise. And budgeting is kind of that word in our field that people are intimidated or afraid to come to us because they're like, hey, we're afraid you're going to tell us we need to budget. And I wouldn't tell anybody they have to budget. It's up to you to determine what's best for you. But for me personally, I find a lot of just beauty and comfort into knowing where money's going, because it's a very mathematical thing. And so if you're tracking where it goes, you can track what's left at the end. So
Yeah. So then how do you get, if the overwhelming portion of society thinks that budgeting comes with this like negative connotation, and someone walks through your door, how do you kind of flip that script a little bit, turn it into the whole, this is freedom. There's a sense of freedom that comes with this. How do you kind of change that mindset?
yeah, a lot of it for me is figuring out long-term goals, getting those set up, and then kind of backing into what the short-term budgeting would be. And so a lot of it is trial and error on a monthly basis, like, and figuring out some of those pain points of what doesn't work regularly. I don't know, I think also with our culture, just kind of this like dopamine culture that we're in, you know, getting people to focus on a long term objective is hard. And so there is, and part of it, I would just say, is that that's our role of just like an ongoing conversation with these people, but being able to continually show people that like, hey, your long term is good, and don't disrupt your long term, and keep that as is. Like there's a lot of power, I think, it's in like, hey, your long term is good, so feel free to spend the money that you have. Like if you continue your current savings rate that you're on, you're going to have X amount at the end, and that's going to drive X amount of income for you. And if that makes you happy, and you're like, hey, at age 60, I can spend $100,000 repeatable income, and you're like, that's awesome, that's what I want, then spend the extra money that you have in your budget. If not, then we need to adjust one of those, going back to those controllables. We need to adjust the how long you work, how much you save, how much you spend, or the risk that you take with your investments. So I'd be naive to say that people are going to come in or leave the office thinking that budgeting's fun. It's probably not going to happen for the majority of people. But I think just for me, if you can get them to realize the importance of it, um, or just the role that it can play in freeing up, allowing them to spend more on their family, allowing them to spend more at Starbucks or things that they're passionate about, knowing that their long term is secure. I think there's kind of a balance between those. And I think with our generation too, like the younger folks, it's like, and it's kind of a passion of mine of what we're working towards, but like, how do you best how do you best manage money for not just 30 years, but for 5 years, 10 years, or some intermediate goal, and being able to produce income along the way for folks that want to have, flexibility or entrepreneurship or different ideals, like you're doing now with this podcast. But I always say, for every client that comes in, I say the purpose of money is to give you options. That's really high level for all of society, the only thing that money does is give you options, flexibility. That's it. And so what you do with those
Yeah,
options or what you do with those flexibility is completely up to you.
yeah, and that's kind of where that personal, you know, point comes in is that you, everyone's options are going to look different. So it's, you know, what are you optimizing, you know, for that specific person? I do want to hit on this whole idea of dopamine culture because it is also something that I'm passionate about, and this whole idea of, you know, keeping up with the Joneses. And it was one thing when your community was those that you live next door to, and within certain reason, you know, you had a similar house, you drove a similar car, kids went to the similar school, and now enter social media for over a decade now, and who you compare yourself to is completely different today than it was 20, 30 years ago. So, you know, how do you guys approach this whole idea of the dopamine culture, like immediate effect, comparing, you know, your livelihood to a broader community, and trying to teach, you know, like the value in delayed gratification and not having to have what, you know, some social media influencer has that you follow. You know, like for me, I'm passionate about health and fitness, as you know. That's kind of how we
Hmm.
met.
Yeah.
And you get on social media and everyone that I follow has a sauna and a cold plunge and, like, you know, 3 gym memberships and all these things, but like I can't do that. So like how do you kind of
Right.
walk people through those types of things?
Yeah. I think it's a good question. It's hard. There's not, and I don't know that there's an easy way. And I would say that too, like a lot of the people who are coming to see us, we're getting more and more just as it's been around for a longer period of time. Like probably even I've been doing this now for 10 years. It's really to me only seems like the past year or so that you're seeing more of the impacts of social media over generations, or just the people that have grown up with social media now are now having more money, having more resources, having more ability to do stuff. So a lot of the people that we've worked with previously have been older generation, and they view the world much, much differently. They probably were, the keeping up with the Joneses was more localized of just neighborhood, et cetera. And so we're getting more and more of that. And so that's probably truthfully something that I'm still trying to wrestle with in terms of what's best. I think that like even for my own personal finances, I think that it is like making sure I have enough long-term resources to know that I can accomplish whatever goals I want to have. So just kind of your basics, blocking and tackling, but then also trying to create enough freedom to be able to spend more money in a age prior to retirement. And so historically, financial planning, I think, was largely like, hey, put as much money into your 401k, IRA, et cetera. Once you get to age 60, you've got a pot of money and you can start pulling off of it. And that's great. But I really encourage almost every client now, like, hey, we need to open up like a brokerage account or have some, real estate investments or have some other pot of money that gives you flexibility prior to that age because things are going to pop up. I think the age of information with the internet, social media, also with this dopamine culture, it's a beautiful thing because everybody can go online and like access whatever information they want to. It's also potentially the biggest negative, and that's kind of why earlier I said I'm betting on that the value of human advice is going to be more and more over time because as all this other stuff gets commoditized, investment world, whatever, people are still going to want that human connection that they can trust. So if I look at our field, like over the history of being a financial advisor, it used to be like for your parents' generation, for my parents' generation, you'd go to your financial advisor, and your financial advisor was kind of a broker who was kind of um, they had information and they had knowledge that you didn't have. They had information in the stock market you didn't have. They had the ability to buy stocks that you couldn't get just by yourself. So you had to work through brokers. Now we're in this more certified financial planning realm where everybody's got the information, or at least a lot of information. Um, but what you do with that information can be amazing. It can also be the most detrimental to your overall financial health. I had, if we look back like 2021, all of my friends, Uber drivers, whoever, were telling me stock tips along the way, saying, "Hey, Jake, you should look at this stock or take a look at Bitcoin or whatever." I didn't hear anything from them in 2022. Like it was just completely off the table. Markets down 20%. And all of a sudden, I don't even have friends texting me about financial advice at that point because they're just all losing a ton of money on it. So that in a small snapshot was the beauty of seeing like, hey, I can go on, the whole GameStop saga. I can go on Reddit and track these stocks and play along. And then also you can see the downside of losing that along the way. So I think being in a trusted relationship, kind of going back to your question of like, how do you best avoid this? I think being in that trusted relationship is the most important. So you alluded it to being a therapist. Like, yeah, you could call us like a financial therapist. And just knowing that, like, hey, like before I make this big purchase, having somebody that I can trust and talk about it with and saying, "Am I okay to do this, or is this going to disrupt my overall financial plan?" And then we'll tell you, we'll say, like, hey, like, yeah, your financial plan is good. Like, go buy that sauna or cold plunge or whatever it is, you want to do that's keeping up with the Joneses on Instagram. But I think having that trusted advisor is very, very important to give you that resource to go to on a regular basis. So,
Yeah, I love the way this conversation is kind of progressing, because you talk about this human element, and I've talked about it a lot. Excuse me, on the other episodes. This whole idea of authenticity and this wave of AI and information. I think what gets lost a lot of times is authenticity or trust. You can kind of frame it however you want. And I do agree that the future of financial services is of that trusted partner, um, that for if nothing else that you can bounce ideas off of and that will hold you accountable like a coach. And that's kind of the way that I look at it. Is that, do you look at it a similar way, or am I completely off base there?
yeah, yeah, no, exactly. Yeah, like I know you've had Trey Fitch, who's a health coach. You've got Allie, who's a nutrition coach. You've got all these different coaches that are on here, and we're just basically a financial coach in that regard. If people come to us and say, "Hey, is the S&P 500 a good investment?" Yeah, it is. Like, sure, do it, and but there's a lot more to it around that. Like, there's things that pop up. Life isn't a straight line. Like, there's a lot of ups and downs that go along the way. There's a lot of health challenges you're going to face, family challenges you're going to face, financial challenges, buying new houses, whatever, and just having that coach that you can talk through it. I mean, that's kind of almost the way that I would view it, is like, hey, I'm hiring, just like I'm paying for a gym membership, I'm paying this financial coach to help me with A to Z of making sure that I'm on track. Because regardless of what Reddit says or the online says or whatever, we're all human, and there's just that human condition that you're not going to get out of with AI or anything. And with human, we're constantly battling fear and greed. When the market's good, that's usually the time everybody says, "Hey, get in the market." That's exactly the opposite of what you want to do. I'd say we're in the only industry in the world when things go on sale, nobody wants it. The stock market goes down 15%, everybody's silent. Nobody wants it. The opposite's true. Usually people are trying to sell when the market's down 15% because there's so much fear involved with that. And so that's the human element that I just don't think you can ever get out of. But yeah, if you view like, hey, this is my financial coach, not just my investment guy that I'm going to, that's a huge change in mindset and huge, I think a lot of success can be had from that. So,
Yeah, and in terms of that kind of coaching mindset, you hit on this whole idea of fear and greed, which are emotions. Which, if you're coaching someone, a lot of the negative or the positive that you're having to deal with is kind of the emotions that come along with it. How do you guys, this whole idea of therapists, now it's coming back on me here. How do you guys walk through that of trying to remove some of the more immediate emotions out of it and think, okay, what's best for you, the client, both and on the road?
Yeah, I think some of that's like tying in really what we've talked about this whole time into like one, it's like trying to figure out where that fear is coming from. You know, if somebody comes in and they're worried about how their statement looks because of fear or greed, it's really seeing what's driving that. If that's just like, hey, I'm afraid of Joe Biden or Trump or whoever, then it's like, all right, we can get past that. Like we just need to like coach you through, be the financial coach to say like, hey, the who's in office is not impacting owning a share of Apple or Procter and Gamble for the next 30 years. They don't Apple or Procter and Gamble, they're going to find a way to sell iPhone services, et cetera, regardless of who's the president in the White House. And so that I would say there's kind of the what I would say is just like your risk tolerance or just like the perception of risk. So like if it's just like a perceived risk that's out there, like hey, Joe Biden, Trump, wars going on in Russia, Ukraine, like we need to work past that. If it's like, hey, I'm worried about my money going to zero, or I'm worried about um, am I going to have enough, or am I worried about something different? Like that's kind of like your very first question of like, hey, what's your best 3 to 5 tips? It's like that's kind of where it's like, hey, we've got to customize this investment solution for you. And whether you're extremely conservative and you're going to own Procter and Gamble type stocks, or even more conservative CDs, bonds, et cetera, or whether you're going to own aggressive stocks, Tesla, Nvidia, et cetera, the best solution for your personal finance is the solution that's going to allow you to stay in the market and not jump out when good or bad markets come. And so that whether you're conservative or aggressive, you can accomplish your goals as long as you stay in the market regardless of those periods. And so kind of elevating it back to those concerns of like focusing on the controllables, how long you work, how much you save, how much you spend, the risk that you take. If your fear or your greed is changing one of those controllables, then like yeah, we need to go back to the plan and like reevaluate the plan. If your fear is just like that fourth controllable, like, hey, we just need to edit the risk that you have in your investments, then we can have that conversation as well. So that kind of ties in a lot of, I guess, all of what we've been talking about is like personal finance is personal. There's no hard and fast way of how to get from A to Z, other than just having that coach that's on your team that's willing to show you and make adjustments along the way.
Yeah, I mean, that makes a lot of sense. And control what you can control. I mean, that's something that just continuously shows up in your life, whether you're talking about finances, health, whatever, just like what we were talking about earlier. I do want to hit on just kind of a little bit of balance. So, balance in terms of, enjoying your money now and also it being there when you need it later on down the road, whether that's for retirement, emergencies, whatever. Balance within your portfolio, whether from a risk reward standpoint of, what's your risk tolerance versus what's the reward that you're trying to get out of your investments, or also from a balance standpoint of like diversification. Like you've mentioned, we're in the real estate space. How do you kind of go about
Mm.
thinking about that with, and maybe the answer is, personal finance is personal and it depends on the person, and but how do you kind of walk through that whole idea of balance and making sure that this personal financial plan, whatever it looks like, is kind of the fit?
Yeah, I think that a good financial advisor or a good financial coach or financial planner or whatever term you want to utilize should be, in my opinion, somebody who is going to act in a fiduciary capacity, meaning they're going to do what's in your best interest at all points. And the reason I bring that up is because I think the value of financial advice moving forward isn't to say, hey, invest everything you have in this one specific product or one specific solution. Like for some people, if real estate makes the most sense for them, like great, like you can have real estate portfolio, you can have an investment portfolio, we can still work together, like all that sort of stuff. Like my own parents, they're much more into real estate than they are the financial markets because they enjoy seeing a physical asset that they can go touch, put their hands on. My dad's a handy guy, and so he likes doing the maintenance and repairs, all that sort of stuff. and that's just how they're wired, and that's great. And so their plan is fine and in a good position, but even though they have more assets on that side than they would with me, there's still a lot of just synergies that can go along with that. And so, like if I think about it in my own world, like I think you're I think that the once again the purpose of money is just to give you options and flexibility. And so like the way that I structure it just for like individuals, like if I can back into what my long term is going to be. So if I can say, hey, I want X amount long term and say I need to save 15% for that, or I need to save 20% of my income for that, or whatever that number is, and could put that into just long term bucket that I don't even need to worry about or think, or I just know 30 years from now it's going to be good for me. Then that creates options for now. It's like, hey, any other additional income I make, promotion I get, dollars that come into the firm or come to me, it's like I can now put that in a different diversification bucket, whether it is real estate, which I know, we've talked about in the past, or, um, a brokerage account to give you flexibility. Because I think, with anybody now, and this kind of also probably ties into like the information dopamine culture is, I think your passions change a lot over time. So just so like in my opinion, you want to create that flexibility where if at age 45, one of my friends wants to start a business and I'm like, hey, I'll give you money for business. Like I want to have that ability to be able to do that. Or if a good real estate investment comes up 5 years from now, like I want to have the flexibility to do that and be able to put money towards that. And so, but by backing in and saying, hey, my long term is good, I'm not having to sacrifice my long term for short term endeavors or vice versa. It's like, hey, I've started with the long term because that's back to that Einstein quote of the most powerful force in the universe is compounding interest. I know that, hey, I can put in a relatively small dollar amount now and know that compounding interest over time is going to be really, really powerful at age 60, 65, et cetera, whatever you define as long term. So I've got that good to go. And now it's like I can focus more on what I want to do in the interim. And that I think just gives you, I mean, it provides you just so much relief and just mental clarity and flexibility. And so that's kind of how in terms of the assets that make that up, as a financial coach, like showing the pros and cons of each, like there's pros and cons to real estate, there's pros and cons to the stock market, there's pros and cons to investing in a friend's business, there's pros and cons to any investment that you would choose. Um, I would say like from an investment, like stock market perspective, the pros are is it's liquid. You can get your money out at any point that you wanted to. The cons are you see that money fluctuate very rapidly on a very short term basis. Now, given time, the market's going to work itself out, but those are just kind of the pros and cons of our world. And for some people, it makes a lot of sense. For some people, like my parents or like people in your world, they're more inclined to that real estate. And I don't think there's anything wrong with that, but just knowing the pros and cons to real estate as well, it probably makes sense to own a few different asset classes rather than being all in one bucket. So,
Yeah, amen. And then you mentioned within that your desires, your wants, your fears, they change over time. And one of the things they mention in that Psychology of Money book that I brought up earlier is that people underestimate how much they'll change over time, right? So the person that you will become when you retire is completely different than the person that you are now. That's not to say that principles aren't the same. The basics aren't the same, but just in terms of what you want out of life will be completely different. And your whole point on flexibility and options, by taking care of that now and looking at it from that mindset, by the time you get to a point where you're a different person, those wants, fears, desires, whatever have changed, you have that flexibility, you have those options that you wouldn't have otherwise. But I did want to switch gears here just briefly because you mentioned looking for a fiduciary. And if someone, we mentioned earlier, there's a lot of noise out there. Someone's sitting here listening to this and they say, hey, I know I need help. I need a coach. I need someone that can provide me financial advice and planning, hold me accountable. What are the kind of the top things that they should be looking for in terms of finding that right person right? Someone that's going to have that, um, they have my best interest in mind mindset.
Yeah, I think one would be that fiduciary capacity. So, financial advisor or the term financial advisor, there are, I mean, really, you just have to take like two tests and you can be a financial advisor. So, like the term financial advisor is pretty broad. So, like any industry, there's people who are really, really good, and there's a broad number of people who probably aren't very good or are very kind of product heavy. And so, fiduciary means that we are obligated to do what's in your best interest at all points. So if paying off your house makes sense, even though I'm not getting compensated for it, I have to, as a fiduciary, would tell you to do that or to pay off your house. Or if real estate investment with Jared makes sense after going through all the paces of risk analysis, all that sort of stuff. If it's like, hey, this is just really what I want to do as a fiduciary, it would be saying, hey, that makes the most sense for you and your situation. So that fiduciary capacity or asking anybody that you're engaging with, are they in a fiduciary capacity is huge. So usually along with that would be also just how's that advisor getting paid or that coach getting paid. So we operate purely on a fee basis, meaning that you pay us a fee for typically the assets that you have under management, or there can be some consulting fee. If people don't have assets but they still want to work with their advisor, what have you. But that best aligns us with them from an investment perspective. A lot of advisors can go under this commission route. And so if you think about a commission route, if you're going to buy XYZ product and pay a commission up front, that advisor is getting paid up front. They're not getting paid anything after that. So their incentive to serve you or be your coach is very, very low moving forward. The person who's acting in a fiduciary capacity on a fee-based relationship, everything we do is a job interview in a sense. Like every discussion we have with any client, they could get rid of us at any point that they wanted to. And so we're constantly incentivized to do what's in their best interest at all points. So it'd be kind of like in the health world, if you paid a personal trainer just for every time you hit a PR, that would be probably much different than if you paid them on an ongoing basis for the constant programming throughout. And so like there's different things that can, or a per session basis or something like that. That per session basis, if you're going to pay every time you go to the gym, you pay one price for that. That's not necessarily, the coach isn't very incentivized to have you come in or something like that. Whereas the other way, if they're on an ongoing kind of retainer almost, they're going to be involved in your world on a very ongoing basis and want you to accomplish goals, all that sort of stuff. So those would be from like the nuts and bolts as far as like what you want to have happen would be fiduciary capacity. And in my opinion, a lot of times it comes with a fee-based relationship. And so the third thing I would say is, the third thing I would say is you want somebody who's product agnostic, which we've kind of hit on a couple times. But if you go to certain organizations, their company or their reps may be paid more to represent a certain product to you if they have proprietary products in house. So if you go to direct with a mutual fund company or something, they get paid more for recommending their mutual fund compared to some other fund. So going back to kind of those others, like you want somebody that's going to, if this mutual fund or this index fund or this ETF or this individual stock makes sense, like you want somebody who all cards are on the table, will help you with whatever solution that you need, not somebody who's going to be pushing product to you. And then lastly, probably the most important is we're in just purely a trust relationship. And so a lot of it's just there's the quantitative aspects. It's like how much, what's our fee, all that sort of stuff. And then there's also the qualitative, like, do I trust Jake? Do I just trust that his team has my best interests at heart? Are they doing what they say they're going to do? Are they putting in the effort? Are they putting in the work? All that sort of stuff. And you're not going to, especially in something as personal as financials, you go through a lot of seasons of life with clients. You go through good times, graduations, buying new houses, kids moving on, things like that. You go through weddings, things like that. You go through sad times like death, divorce, all the things you don't want to talk about. And so you've got to have somebody trusted in your corner that kind of go into more of that therapist role that you feel comfortable going to them with anything that's out there. Because if they're going to withhold information from us saying like, hey, I don't feel comfortable coming to Jake with an upcoming divorce or something, I can't provide good advice if I don't know it's like I'm giving advice with one hand tied behind my back. And so you've got to have that trusted relationship with the advisor, and that's primarily probably more of a feel thing than it's going to be anything quantitative. And that's why we pretty much operate off of referrals and just people saying, hey, I've used Jake for a long time and I trust that he does a good job, and Jake and team, and you should go see them, kind of thing.
Yeah, I would kind of relate it to most of you guys probably know that my background is in public accounting on the tax side, and I would relate that whole trust relationship idea to filing a tax return. If someone comes to me at the end of the year and said, "Hey, I did X, Y, and Z, help me save money," well, you already did those items, and there's not really too much that I can do for you. But if you're having that trusted conversation throughout the process and being upfront and forthright and sharing all fears, concerns, desires, wants, then someone like Jake's going to be able to do a lot more for you and assist and be that coach along the way. So, one, ask about their fiduciary responsibility. Two, ask how the advisor is compensated and about their product agnostic, and things like that. And then four, you've got to do your own process of evaluating that trust and make that decision for yourself, because it really is comes down to that whole qualitative versus quantitative idea. Jake, this has been great, man. I could sit here and pick your brain for free for hours, but I'm not going to do that.
Yeah.
I wasn't going to bring it up though, but you did bring up Bitcoin, the whole meme stock idea. You know,
Hmm.
with the way that Bitcoin cryptocurrencies are ripping, finish it off with something fun here. Do you pay much attention to that at all? Especially with the ETFs coming out for Bitcoin. Do you watch that? Do you have clients asking for it, or do you just kind of push it away and say this not our area?
Yeah, I do pay attention to it. I think the future of digital currency is certainly there, in terms of just some medium of exchange, et cetera. Um, we get questions about it all the time. And I think it kind of boils down to a couple things. Like, one, I don't typically recommend things that I don't fully understand. And I think this is for anybody. I think anybody who tells you they understand everything about everything is probably lying to you. Um, and I don't think that I wouldn't feel comfortable recommending Bitcoin without me personally understanding all the ins and outs and blockchain and all that sort of stuff. So I've done a lot of due diligence on it, but I still have a hard time just grasping what the future, or what the end result of it would be, other than just like a speculative asset at this point. Um, Usually when people ask us about it or say, "Hey, should I buy it?" It kind of goes that whole diversification thing. Is if it's not going to disrupt long term stuff, and if you're aware of what the risks are, and if you're saying like, "Hey, I just want to put a small amount of money in there," then sure, yeah, like go play with it, have fun, like see what happens, and I hope it doubles or triples or quadruples for you, and it turns out really, really well for you. But just being aware of what those risks are and saying like, if somebody said, "Hey, I've got 50% of my allocation in Bitcoin," that's like, all right, well, we should probably discuss what the goals of this is. So you've got people all over the spectrum. I personally, I think it's a very, I think it just kind of goes that whole future thing. Like I think it's certainly has got a role, and I think that it seems like Bitcoin's here to stay. I think in several years ago it was kind of like, hey, is this a fad or is this going away? And like you said, with the release of new ETFs and things like that, um, that just increases the money flow going into them. Um, but I think there's still a lot of challenges and headwinds ahead of it. And for me, if you own Like if you own a share of Apple stock, you are a part owner of Apple as a company. Um, and so Apple is producing value in the sense of they are creating more goods and services every step of the way. So as Apple's earnings grow, your stock price grows. That's just stock market fundamentals 101. So as they produce more value in the world, their price goes up. With Bitcoin, Bitcoin is not producing value, but it has a value. So there's not actively new, there's a finite number of Bitcoin in the world. So its value is based on just, it has a value based on the supply and demand at that point, which you've seen correlated to, it can be tied to what's going on in the inflation world or interest rates or whatever, or just kind of general risk appetite. But it has a value, whereas something like Apple, Procter and Gamble, et cetera, in my opinion, produces value over time. So, um, not opposed to it, but just being aware of how much you own and how it fits into an overall financial plan, or if it's just more fun money, something you want to throw at it, then absolutely go for it.
Yeah, I appreciate that explanation. I think that makes a ton of sense. I heard the other day, um, a friend of a friend put their entire 401k into cryptocurrencies, and you know that's not what I would do, but by all means, like,
Yeah.
you know do what you got to do, I guess. I hope it works out for you. But anyway, Jake, man, I appreciate.
Yeah, and I think part of that, I think, probably ties into like what you're talking about, like keeping up with the Joneses on
Yeah,
Instagram. It's like it is like, I mean, kind of putting a bow on all of it, like tying it into the fear and greed. It's like everybody's chasing what they're seeing
yeah,
online, basically, so not letting short-term emotions disrupt a longer, bigger financial plan
yeah. I
or
mean,
financial
everyone wants
choice
to
you make.
talk about
So
like awareness, and it's important in your financial life as well as being aware of what types of emotions drive your decision making. I think that's important, and
yeah,
kind of relates back to that whole keeping up with the Joneses thing. It's not that, you can't go out and get that new car. It's just being aware of, well, what's driving the need for that new car? Is it because my old one's breaking down and doesn't get
yeah,
the job done
exactly.
anymore, or is it because Susan next door got a new one and I've got a one upper? It all comes down to kind of
Right.
that whole process. But man, thank you. People have sat here
Yeah,
and listened to
absolutely.
you for a little while. You've convinced them, hey, Jake, someone I want to talk to. How do they get in touch with you?
Yeah. So our firm name is Sage Spring Wealth Partners. And so you can find me on there. My email is Jake dot Powell, Powell at sagespring.com. Also on LinkedIn, all the social media sites. Instagram is Jake Powell, POW underscore. But yeah, any of the common sites or Sage Spring Wealth Partners would be our website.
Awesome, man. Well,
So
I appreciate you taking the time, and we'll catch up soon.